Hello, my name's Ethan. Make sure to check my website, ethanwrenn.com, from there you can find links to all my various socials. I also have a blog there. I'd really appreciate it if you guys were to check that out, as well as an online store where you can buy shirts, hoodies, hats, all of that. I'd really appreciate it if you guys show your support. Well, what's the next symbol we're going to be jumping into? We're actually going to be doing another entry into the That Time We Shorted series, and this one's going to be coming directly out of the Discord. I've kind of had a couple running themes today, right? You know, reminders as to the value that our Discord can provide, and again, it's completely free. It has a bunch of great alerts you can use from all the major media news outlets, interest rates, all of that gets updated automatically, and we also have a great community of like-minded individuals who like talking about investing, and could potentially present great opportunities in there that I might just not have time to make a video about at that period of time. So there's a lot of stuff that happens maybe on smaller time frames that you can get involved with just by being a member of the Discord, and it's completely free. So what is it we are going to be covering? Well, as you can see here, I have the Discord open on one side and my blog open on the other. This is just an example of what one of the posts might look like. So you come to the top, click blog. There's a bunch of different posts. You pick one that you see value in, and then you can, scroll through it. It has information about the product itself. It has information about the top holdings of like an ETF, for example. And then every blog post also has its own unique video that coincides with it. You guys can leave a comment. Let me know what you guys think. Give me feedback. I always appreciate it. So what we're going to be looking at today is symbol XXII. Now, this one was actually quite popular, right? We were definitely covering it in the Discord. It was definitely talked about on the Twitter as well as the Reddit. So make sure you're following on Twitter. Make sure you join our Reddit community. There's a lot of information that gets posted on Reddit, such as news articles that we're talking about. I'm basically trying to clone the Discord onto Reddit in a way. So if you're a member of one of them, there's a lot of great information you could be presented. So what were we saying about symbol XXII? Now, this was posted April 26th of 2021. So it is now 2023. This was about, give or take, 2 years. 2 years. Wow. 2 years. Is 2 years a long time when you guys think about it? Is 2 years a long time? I mean, we've been sitting here doing this for 2 years. So, I mean, is 2 years really a long time frame when people think about it? So here I am talking to community member Midnight, and we're in the bearish stock talk channel. Again, this isn't, as you can see, we have 3 different sets of channels, right? We have our standard stock bot channel. This is where people are posting, I don't know why it's loading so long. People are using the stock bot commands, for example, regularly. As you can see, we were commenting on Carvana. We've been tracking Carvana for 6 months now, and if you had been invested in Carvana, you'd be up as much as 500% since December. Here's just an example of some of the things that we're talking about in Discord that might not make it to a full-blown video. Carvana isn't necessarily the most profitable of companies, so that's another reason I might not have made a video about it, but that doesn't mean there's not profit to be made, right? So, but again, coming in these channels up here, right? These channels, so these are the stock bot channels. These ones are typically dedicated to long-term style investments, right? Things that we're making YouTube content about, things that we're making blog posts about, the long-term stuff, the 2-year time frame stuff, on XXII is getting posted up here. On top of that, Boeing earnings must have been that week. We're saying, oh, Boeing might miss, or saying Tesla might miss, and he's saying Midnight was informing me of one of his trade ideas, and he was saying, I'm looking into a quick rip for Tesla for the earnings. They usually plummet, but for some reason I'm habitually completely on the wrong side when I play Tesla. And I'm like, this is just my 2 cents. I probably wouldn't touch it, so take it with a grain of salt. But Tesla has always struggled with being profitable. I feel like they miss more often than not and are currently very bloated or overvalued. Lull. Midnight then stated, they've been in the black the past 7 quarters, I believe. So that's good. But even if they crush the earnings and have a long timetable on their outlook, it tends to drop. I lost big on their battery day announcement last summer. And then I'm informing him that watch XXII. If it touches $6.07 again, that would be the short of the year. Short of the year. Short of the year. Look at that. Look at that entry. And then he's like, what the? I'll have to check that out. So he goes to check that out. Cool. Under that, I said, it's the chart right above this convo. Again, we're talking about this symbol. He says, I really want to grab a put on Tesla and sell tomorrow. So he's expressing that he's just trying to do an earnings play here. You know, he's trying to just do a simple earnings contract flip, you know, squeeze a couple of the extrinsic value out of some contracts on Tesla. I'm pretty sure he hit that trade as well, by the way. I'm pretty sure he hit that trade, but it was a much smaller time frame, you know, just a singular week of movement he's focused on, not necessarily something like this. But, you know, I'm trying to lead him in the right direction. If he's someone who likes playing short, you know, this is a great opportunity long term. So I really want to do that. That's some chart right there. Yeah, it is. Whatever you do, just be responsible. Don't take on more risk than you can handle. And then he grabbed a 675 put. So here's the interesting thing. He grabbed a 675 put. I think there's been multiple reverse splits on Tesla at this point, so this price point may sound like completely foreign. And then I'm like off with his head. And then this week, EXP2, I hate same week expirations. Yeah, me too. Honestly, don't do that. That's gambling. That's not good. Don't buy contracts with that expire in a week. That's crazy. But we want Tesla to break below 3 set. So I'm telling him, like, I'm watching the symbol after hours with him to see if he hits, and then, you know, earnings get announced, right? And he's like, we sure do. Next support is 730. Shit's already breaking down, right? It's breaking down. And I'm like, scratch that. It's now at 725. So we're successfully shorting Tesla's earnings. Again, this was 2 years ago, guys. Two years ago. If the earnings come back as anything but perfect, it should drop a bit. So he's already winning. He's already winning on his contract, but some plot twist. It's like, yeah, I'm watching the level 2. It looks crazy. I'm rooting for you. Meanwhile, I'm fighting over pennies on XXII. Lol. Tesla is like that, though. Huge swings. It's like, I'm trying to get the $6 after hours fill on XXII, but somebody keeps putting in an ask of 5K shares a penny below me on the level 2. And he's like, LMAO, really? You just grab shares? And I'm like, I'm kind of a shares guy personally, which I am still to this day, and I highly recommend it. I don't recommend just jumping into options. Options are for people who want more leverage than they have the money to get. And he says, or I said, I'm a shares kind of guy. You could say a global macro investor, mainly do long-term holds or short on weekly and monthly charts. He's like, gotcha. You think XXI is going to drop after having that huge surge or keep climbing? And then I was just, because I was again, we're still watching this Tesla earnings play happen out like midday. He said, and then I say, based on the chart, I think, okay, read this paragraph, right? Not edited. Based on the chart, I think it's bearish, having prior resistance at this price level. Keep in mind, I'm talking monthly charts, so you have to be patient, and you will have to get a good fill. Shares cost about 2% annually to borrow. That's your borrow rate, guys. When you short shares, right, sometimes there's fees, a borrow rate that gets associated with them, and 2% is nothing. 2%, nothing. Like, I'm not worried about that at all. That's great. But sometimes it could be like 9%, which is crazy. And you might be more turned off from shorting a company like that. 2%, give me all those shares. So let's say you go short at $6.09, and 1 year from now it tanks to 66 cents. That's a 90% return on investment minus the borrowing fee. That's 88% in 1 year. Which is, you know, this is my thinking when I'm going into this XXII trade. Again, he's still focused on his 10-minute contract flip on Tesla earnings, but it has made that exact move before in 2014. So following the trends and patterns, it's not impossible for it to happen again. This is not edited. This was my thinking going into this investment. Get in at 609. It's going to go down to as low as 66 cents. And you know, if you're a novice investor, you hear someone saying like, he's going to buy at $6 a share and ride it to 66 cents. You sound like an insane individual. That sounds impossible. That sounds impossible, doesn't it? But, I'm pitching it. The borrow rate's good. The rate of return would be excellent, when this pans out. And here he is, again, focused on his Tesla trade, rightfully so. And he says, somehow my put is minus $235, even though the stock is down. I should be way in the profit, way in the positive, making money at the moment, but I'm not. Any thoughts? And he got IV crushed. He got IV crushed, like hella bad, hella bad. And this is what I've been telling people, because this concept is very prevalent right now in the markets over the past 6 to 8 months. If you've been buying options, I mean, the entire option market has been getting completely gutted, completely obliterated. You don't want to be involved in the options market. Even if you get the direction right with your options contract, the IV crush that has been happening over the past 6 to 8 months, it doesn't even matter. Like, you're losing money if you're buying contracts. The only people making money in the options market right now are people writing contracts. The big banks, the people with all the money, right, who are writing your contract. Those are the only people making money. Because here he was, right? He formulated this plan. He's like, okay, I'm going to do this 1 week contract for a Tesla put. He's going to buy it because he's expecting the earnings to be bad. You know what? Okay. The earnings probably will be bad. It is Tesla after all. And he was right. The earnings were bad. And the stock, it did go down, what it was like $700. It went down like what, 4%? 4% on 5%, something like that. But he still lost over $200 on that contract, even though the stock moved in the direction he was anticipating. And this is because the implied volatility was just sucked out of his position, right? The implied volatility decreased, so that $200 went directly to the written side of that contract. And that's, just kind of how it works. And that's one of the main reasons that we haven't been saying, we've specifically and explicitly been saying that options are bad investments over the past year, because that's what's been happening to everyone on every company. If you're buying it, you're getting IV crushed like so heavy. But written contracts are making buku bucks right now, so keep that in mind. And then I said I'll let him know when I have a free moment. He's like, oh yeah, the stock is down $28. And then I'm basically explaining to him, options introduce a lot of extra variables known as the Greeks in exchange for leverage. Each option has its own supply and demand. Weeklies are very risky, as you need to be quick with them. So I'm explaining them, like, first off, you should never be buying any contract that expires. You're basically investing into something that has an expiration date. Like, that's just so bad. But even if you were to be trying to make an investment using options, you should definitely be looking like 6 months out, a year out, 2 years out, like not a week out, a month out. No, that's crazy. And then I'm explaining to him the Greeks, and again, how there's this give and take relationship with the implied volatility, with, again, written contracts versus bought contracts. Each contracts have their own supply and demand. So, I mean, there could be bad liquidity on the contract you bought. There's a lot, but again, that's just another reason why, honestly, shares are the way to go. Options are for people who want more leverage than they have money to get without options. I mean, and it involves a lot of extra variables and risks. It involves a lot of extra risks that people who are just trading shares just don't even have to deal with. That's my 2 cents. Options are very irresponsible to promote to a broad audience of varying skill levels, who most likely 80% of the viewers can't even efficiently operate in those markets. So it's very irresponsible to even be promoting this to a broad audience of varying skill levels, a majority of which just shouldn't be there. So that's my 2 cents. And then I said, if you want to talk more about your Tesla trade, you can join the voice channel. So again, that's pretty much the entire conversation, again, regarding XXII and what I had to say. Again, based on the charts, I think it's bearish, having a prior resistance at this price level. Keep in mind, you're talking monthly charts, so you're going to have to be patient. It's going to take a long time, and you want to get a good fill. Shares cost about 2% annually to borrow. So let's say you short at 609, and 1 year from now, it tanks to 66 cents. That's a 90% return on investment minus the borrowing fee. That's 88% in a year. Anyone would be happy with that. Anyone would be happy with that. And it has made this exact move before in 2014. So follow the trends and patterns. It's not impossible for it to happen again. Well, let's take a quick look at how XXI is doing ever since we covered them here. Here is symbol XXII. As you can see, when we made this video, it was right up in this candle. This is when we were prompting it. $5.50 range, literally right here. And we're saying, get your fill at $6. Get your fill at $6. This is going to be the short of the year, man said. He wasn't glazing at all. He wasn't glazing. He was being completely honest. This is going to be the short of the year, dude. Don't miss it. You know, people be out here like, oh, this is going to be the biggest and the best. He wasn't glazing. Like, it happened to a T. Look at the price point. 57 cents a share. Where did I say it would be? 60 cents. 60 cents from $6 to 60 cents. It doesn't get more photogenic and pixel perfect than that. It really doesn't, guys. It really doesn't. It really doesn't. Excellent. This was an excellent trade. And again, it was quite popular. Again, if you follow on Reddit or potentially Twitter, would have been where you've been hearing about this, or in the Discord. This is just an added reason why you guys need to be in the Discord. But again, it was at $5.50, $6. Again, that happened in like the same day or whatever. And everything I mentioned, you know, it had been at this price. It had been rejected from this price point before. It had made a similar downside move in 2014. We pointed this out. What are some of the other reasons we don't like XXII? If we just want to talk on a more fundamental level, well, as you can see, they consistently miss earnings over and over and over and over again. They do not have a dividend yield, which means if you are holding a short position, when you short a company and that company has a dividend yield, you, the person who shorted the shares, pays that dividend because you shorted those shares. Someone's got to pay it. But when a company has no dividend, you can hold shares short for a very long period of time and not have to worry about paying out dividends. That's another thing a bearish investor might have liked about this. What else might they have liked? Well, let's look at their income statements. Negative 30%, negative 102%, negative 70%, negative 105%, negative 96%. Do I need to say anything more? This was the golden opportunity of the past 2 years, and all of this stuff had been happening like simultaneously in the back. You could have had, you know, you could have been holding this simultaneously on alongside, right? You know, you could have had a beautiful strap here that you benefited over the past year and a half, 2 years. And it's just excellent, really. How long did it take? Now, it did take longer than a year to unfold, right? It took just about 2 years exactly for a 90% return minus our borrowing fee. Wait. Ugh, I'm going to leak something. Okay. So 2 years, 90% return. We got a 90% return minus our borrow rate for 2 years. 4%. minus 4%. That's 86% return. Divided by 2. That is an annualized return of 43%. 43%. That's an annualized return of roughly 43%. Again, on a bearish move. So you're benefiting on the market's worst days with a position like this, right? You're benefiting on the market's worst days, and you're getting an annualized return of 43% per year. This could not have been more of a direct route. You know, like this was not a very hard position to hold for a long period of time without getting seasick, without getting car sick, right? Like this was a pretty direct, smooth route from a $6 price point to a 50-cent price point. Absolutely massive. And again, this was an amazing position that everyone in the Discord would have known about. Everyone on Reddit would have known about. So I just wanted to act as a reminder. Make sure you're in the Discord. It's completely free. There's no reason not to be in there. You know, no reason not to be in there. And I said, watch XXII at 607. Again, that would be the short of the year, like STKL. That was a different one we did. We'll save that one for a different day. But the short of the year, and that was not cap. That was 100% honesty, just based on, you know, all the information we have available to us. No dividend. They consistently miss earnings. Minus 105% profit margins. So bad. So bad. And again, no glaze, you know, just being honest. Again, I'm walking midnight through his Tesla short, and again, he was right. That he hit, but because, you know, the way options actually work, you know, they have there's a lot of variables involved. Even though he hit, his option contract still lost him over $200. So it's just something to keep in mind for all these bad, all the bad advice you might get telling you that you need to be involved in options. You really don't. They're losing heavily. Written options are where it's at, but you know, it's just irresponsible to promote options at all to a broad audience of varying levels of skill when you especially know a majority of them just shouldn't even be looking at it. So yeah, again, I just wanted to cover that. And now you might be looking at this chart behind me saying, it's been completely shorted into oblivion. It can't possibly get any lower. Look at his support and resistance lines. Is this going to bounce? That's a good question. From its current price point of $57 up to a previous high of, let's say, $4.40. Let's just entertain the idea to see what it would look like. Up to $4.40 would be a gain of 639%. Up to a price point of $6, that would be 900%. Now, this is definitely not what you see me trade on my channel. In fact, it's what you see me short on my channel. So keep that in mind. But the market cap of XXII is 128 million. Very tiny company. Very easy to push around and both directions. That can be a pro and a con for some. Now, what is XXII? XXII is a biotech company, but they often get referred to as like a weed company. I believe what they do is they have some sort of biotechnology that allows them to adjust like nicotine levels or THC levels of seeds before they even get planted. So that's the type of technology they offer. You know, there's a lot of weed. They often get grouped in with like weed ETFs, which I'm actually going to pull up here in a second, but they're kind of far removed from that. They're more a biotechnology company that has a little bit to do with those products than they are like the other way around. But, you know, they're not profitable. They miss earnings. Fundamentally, they're a very flawed company. On a technical level, I can see an argument being made how oh, that 600% could look nice. That 200% just up to $1.70 could look nice. That 900% to 6 could look nice. And I'm not saying it's impossible for it to run this lap again. In fact, it could very much happen. You wouldn't really see me taking a trade like this. You never see me cover companies like this. You only see me cover companies like this on the downside. This is the type of company where it's more fun to ride it from the top to bottom than it is to ride it from the bottom to the top, if you understand what I'm saying. But we can't ride it from the top to the bottom without somebody riding it from the bottom to the top, right? You know, I can't enter again at $6 short for another 2 years if it doesn't touch $6 again, right? So, keeping that in mind. I pulled up a list. I think I covered that well, actually. I pulled up a list, ETFDB. I quite like this website for research regarding different ETFs. ETFDB.com. I like them. No affiliation with them. They are, I find it a good resource for learning about different ETFs. So here's marijuana ETF list. We have MSOS, we have MJ, we have MJUS, we have YOLO, PODX, CNBS, we have THCX, TOKE, Phil. Now, unsurprisingly, XXII is held by a lot of these ETFs. Makes sense. I just finished stating that this company often gets grouped with a lot of these weed companies, even though they're more of a biotech company than a weed company. I just want to quickly look at these so you can see how this move in XXII kind of coincided with a lot of these. So I'm going to add some of these. I'm going to overlay. We're going to do the ETF with the highest market cap. As you can see, a lot of these are not old, right? They're not old. We're going to do global. I'm going to do the MJ Global, the second highest market cap. Alternative Harvest. As you can see, there's a US variant and a non-US variant. We're just going to look at... Oops. Then we're going to add... POTX, because I've seen this distributor before. We'll add symbol weed. And we'll add one more. See, the reason we're doing this is because I want to compare the results of XXII and our short relative to the broader weed market that it often gets associated with. As you can see, as of when we were entering XXII, I'm trying to keep the time frame right, or else it's going to look like really skewed. Not only did XXII perform in the manner that it did, decreasing 90% over, what was 2 years? The entirety of the weed market also saw this 90% decrease simultaneously. Now, I've looked at some of the underlyings of these different ETFs. A lot of the underlyings are the same between them, so it would make sense that they perform similarly, and it doesn't matter as much which one you're buying. I would recommend, if you were looking at any of these, there are some of them that have really bad if you were looking at any of these, there are some of them that have really bad liquidity, which means low volume or low average volume. Stay away from those ones. And there are some that offer maybe higher dividends than other, and you would probably prioritize those ones. But regardless, all of the underlyings for these companies are extremely unprofitable companies. to say the least. As again, we just finished covering the abysmal financial reports of XXII, and a lot of the underlyings for these ETFs are also equally bad. So it again further explains this 90% decrease over the past 2 years. And again, every single one of these ETFs have had an equal decrease, right? MJ had a decrease of 85%. YOLO had a decrease of 87.69%. POTX had a decrease of 92.16%, actually worse than XXII did. The ETF, POTX, performed worse than XXII, which was already at a minus 89, 90%. So, damn. Similarly, if I change the time frame, right? So we were looking at the results for the past 2 years short that we did, right? That we're now recognizing not only was there a successful short across XXII, a singular multi-$100 million company, but the entire across every single of the marijuana ETFs, which again consist of very awful poor companies, saw equally downsized move that you could have been shorting those as well and making just as much. Now, if we bring this time frame out a little bit farther to the bottom, the last time XXII was at this price point of $60, as you can see, XXII, when the weed ETFs are running, XXII also outperforms them. Again, it's more of a biotech company than anything else, right? It's more of a biotech company than anything else. But even on POTX's, YOLO, and Weed's best days, XXII is outperforming them. So if I were to choose between potentially buying YOLO or MJ or just getting XXII, I'd probably get a better return on something like XXII than any of the other companies that make up YOLO. But again, ETFs offer that diverse exposure to a broad market by distributing that risk across a bunch of underlyings. But again, when all the underlyings are not good and don't perform well, you have this. I just wanted to show kind of how those track over long periods of time. As you can see, the one with the longest price history is MJ. We could look at that. But yeah, they just don't really do well. Okay, I think that's everything we have to say about XXII. Again, it's probably more fun to ride these weed ETFs down than it is to ride them up. And the same thing can be said about XXII. Let me change the time frame. It's probably more fun to ride a symbol like XXII down than it is up. But I can't ride it from $6 to 60 cents if it doesn't touch $6 again, right? So on a technical level, this is a pretty decent looking symbol that could potentially bounce and push into that $4 to $6 range in the future one day. Does that mean you should buy it? Not necessarily, because when we look at them at a fundamental level, no dividend yield, they miss earnings often, and their profit margins are insanely bad. So again, that's everything we had to say about XXII. If you guys aren't in the Discord, make sure to join the Discord. It is completely free. And again, you could get informed about great potential investments such as this. We're going to be moving into our next bit of content here. Give me a moment.